You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 6th day of May, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast, that is our live training room, and it is reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a purple button. Click it, fill out the form, submit it, and we'll get your indicators up and indicating today. You will get 5 consecutive trading days on the trial, no credit card required. The weekend doesn't count against you, so don't worry about the fact that today's already Tuesday. You'll still get 5 consecutive trading days, okay? And you're not just getting access to the live training room, but you get access to everything a passport holder has access to. For a full week, no credit card required. We want you to be able to make a well-informed and intelligent decision at the end of your trial as to whether or not trading is right for you. mytradingiq.com, purple button, top of the page. Click it. Set things in motion. Okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, but this time scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you'd still like to join live. And some days you'll be busy. Can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Remember, there's over 2,800 daily episodes archived there. Now, obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have handy, and again, it shows you how we've evolved over the years. Again, thanks to the power of YouTube. youtube.com/CFRN. This is our afternoon schedule. About an hour into the broadcast, Michael will join us and give us a recap of what happened in the live training room, and then we'll do some live trading on the TradingView platform, and then I'll wrap everything up with our good word for the day. But we'll start where we always do, with our daily devotional. The topic we're on now is after the cross. We did Easter and Holy Week. That took a couple weeks. But now, what happens after the cross? Today's scripture is Matthew 14, verse 28. I'm sharing it from the Message translation. Peter, suddenly bold, said, "Master, if it's really you, call me to come to you on the water." Now, if you've ever been to Sunday school, you've heard that story. One evening, after feeding over 5,000 people, Jesus told the disciples to go out on the lake so he could get some time alone with his Father. His dear friend and cousin, John the Baptist, had been cruelly murdered at the whims of an evil man, King Herod. And Jesus just needed some space. But after spending the night into the early hours of the morning, Jesus decided to catch up with his friends on the lake. So he caught up with them by taking the fastest route, by walking on the water to them. The disciples saw someone coming from the sea, and they were, understandably, terrified. But Jesus spoke, identifying himself and telling them not to be afraid. Peter responded in Matthew 14:28, "Lord, if it's you, tell me to come to you on the water." Jesus told Peter to come to him, and Peter got out of the boat and he walked on water to Jesus. He walked on water. Feet above water, gravity defied. The normal parameters of human life defied. With Jesus, we are on the biggest life adventure. And with Jesus, we can do more than we ever thought possible. For a moment, Peter was brave, and he got a glimpse of the power of faith in Jesus. And we all know what happened next. What could we do if we trust in him, not in our own abilities, but his? Let's pray. Jesus, like Peter, we long to step out in faith and walk towards you, even when the waves rise around us. Give us courage to say, "Lord, if it's you, tell me to come." Help us fix our eyes on you, not the storm, and trust that your voice leads us safely through. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Tuesday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 213 points. The NASDAQ down 104. S&P 500 down 25. And the Russell 2000 down 11. Pretty quiet. And that's how it often is before Fed Day, which is tomorrow. The Fed announcement will come out at 2 p.m. Eastern, be out of the market. Then at 2:30, Jerome will deliver a prepared statement and then take questions from the audience. That's when things can get very lively and very volatile. In the commodity basket, crude oil making a big turnaround, up $2.40 on the session, trading 59.53 last. That's a gain of over 4%, or $2,420 per contract traded. Gold up $82.90, trading 34.05 last. That's a gain of 2.5%. Silver up 76 cents, trading 33.24 last. That's a gain of over 2.25%. In the Asian markets at the close, the Nikkei posted a gain of 378 points, just over 1%. The Shanghai added 37 points, again a little over 1%. And the Hang Seng gained 158 points. In the European markets at the close, FTSE up a little over a point. The DAX fell 106 points, and the CAC down 31. So we had a green day in Asia. It was a mixed day for the UK, thanks to that 1 point from the FTSE. And so far, it's a big red radio Tuesday here in the US of A. Is this a turnaround Tuesday? Hard to say with the Fed coming tomorrow, but we'll be ready. We'll be ready. Jury selection kicked off yesterday in a Manhattan federal court in the criminal trial of hip-hop mogul Sean Diddy Combs, who faces 5 federal charges, including sex trafficking and racketeering conspiracy. The 55-year-old has been held without bail since his arrest in September, and despite all the evidence, despite all the testimony, despite all the video, he's pleaded not guilty. Prosecutors allege Combs led a criminal enterprise starting in 2004, using his music and business empire to intimidate, exploit, and traffic women for sex. The indictment details claims of abuse, coercion, and efforts to conceal evidence, including organizing so-called freak-off parties, with 4 accusers expected to testify. Combs' defense argues the encounters were consensual and has turned down a plea deal. Roughly 150 potential jurors will be questioned individually by the presiding judge and both legal teams, a process expected to last 3 days. And for those of you who don't know a lot about the courts, which is, I guess, a good thing, jury selection is called voir dire. Yep. I learned that from watching, oh boy, yeah, that show. where jury science was their whole business. It's a guy that used to play Tony on NCIS, but that was another lifetime. Roughly 150 potential jurors will be questioned. That's a lot. And opening statements are scheduled for May 12th, with the trial expected to last several weeks. If convicted on all counts, Combs could face life in prison. Swiss bank UBS Group yesterday agreed to pay $511 million to settle a criminal investigation by the U.S. Justice Department that found Credit Suisse, that's the bank UBS bought in 2023, helped wealthy Americans evade taxes on more than $4 billion in at least 475 offshore accounts. The settlement comes more than a decade after Credit Suisse pledged to halt such practices. In the most recent case, Credit Suisse admitted to conspiring to help wealthy individuals prepare and file false U.S. tax returns from 2010 to 2021, and was found to have repeatedly failed to fully disclose offshore accounts to authorities. The settlement comes 2 years after the U.S. Senate Finance Committee found Credit Suisse had breached its 2014 plea agreement with the U.S. government. UBS said it was not involved in the misconduct, which occurred before UBS bought Credit Suisse for $3.2 billion under a Swiss government brokered deal to avoid a potential banking crisis. Yeah, that's a big one. Wall Street, what do we got? According to Bloomberg, billionaire investor Paul Tudor Jones said he expects U.S. President Donald Trump to dial back China tariffs by 50%, but said stock markets could hit new lows even if he does. Oh my, the sky is still falling. You have Trump, who's locked in on tariffs. You have the Fed, who's locked in on not cutting rates, said Jones, founder of macro hedge fund Tudor Investment Corp. That's not good for the market. Jones 70 said he's sure Trump will slash the current tariffs on Chinese imports, now as high as 145%, by half. But he called the levies the largest tax increase since the 60s, and said that unless the U.S. Federal Reserve suddenly starts cutting rates, you're probably going to new lows. Yeah, Fed, get off your backside and lower rates. Come on. Fog the mirror knows it's time. This political game you're playing with Trump, this digital game of chicken, this currency version of chicken, it's not helping anybody. Berkshire Hathaway stock was little changed today, gaining about 0.2% in early trade, following a 5% fall yesterday after the conglomerate's board approved longtime CEO Warren Buffett's successor, Vice Chair Greg Abel. That's right, Warren Buffett stepping down. On Tuesday, Class A shares were hovering just below $765,000 per share, while Class B stocks were trading near $510 per share. I'm sorry. New Limit, a startup that aims to increase how long people can live a healthy life by genetically programming their cells, has raised a $130 million Series B led by Kleiner Perkins. New investors, Nate Friedman, Daniel Gross, and Khosla Ventures, also invested, as did returning backers Founders Fund, Dimension Capital, Elad Gill, Gary Tan, Patrick Collision, and others. The fundraise comes 2 years after the company just raised a $40 million Series A. Founded over 4 years ago by Coinbase CEO Brian Armstrong, former GV partner Blake Byers, and stem cell professor Jacob Kemmel, claim that New Limit has made significant progress towards developing treatments that can restore youthful characteristics to old cells. That'd be something if it works. But again, scientists in the laboratory trying to be God. That's never worked out once in history, has it? Who knows? Maybe we're entering a new age. See what I did there? Also from Bloomberg, Wall Street's mood remained bound to the repercussions of Donald Trump's trade war, with stocks moving away from session lows after Treasury Secretary Scott Bessent signaled negotiations with several commercial partners are going well. As investors awaited more meaningful breakthroughs in tariff negotiations, the S&P 500 erased about half of a slide that earlier topped 1%. Bessent said many countries have good offers, reiterating that some deals may be announced as soon as this week. He also noted the possibility of a substantial reduction in tariffs on U.S. goods, while noting there's nothing in recent data that indicates the economy is in a recession. Thank you, Scott. And last, what do we got? The U.S. government could raise more than $100 billion from taxes on imports if new White House investigations into goods like pharmaceutical products result in yet more tariffs. U.S. officials are currently looking into potential tariffs for several sectors, citing national security, including imports of copper and lumber, as well as pharmaceuticals. Well. Okay, let's do the local news. Logic 247. That's our 24/7 around the clock E-mini alert service. We're currently in week 353. Over the last 353 weeks, we have issued over 19,500 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure, a simple process we teach all of our passport holders. Now, since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 27 alerts. Valerie did the recap this morning at 6:30 a.m. Eastern, so some things have probably changed since then. And she will, of course, update the recap this afternoon or early evening. Of the 27 alerts issued this week, we're still waiting on the outcome of 11 at the time she did the recap. That gave us 16 actionable alerts, of which 1 or 6% would have been stopped out, again based on market structure and the simple process we teach all of our passport holders. Now, every logic alert has an entry price, an initial target designed to help you get your goal for the day. Then typically there will be additional targets and then a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., as opportunity presents. But the real purpose of the alerts, yes, you can trade them. I mean, If you don't like those results, wow, you're really hoping for a lot, I guess. But anyway, the purpose of the alerts is to teach you how to read a chart. If you're going to be a lawyer, you got to be able to read case law. If you're going to be a doctor, you got to be able to read the medical journals. If you're going to be a trader, you got to learn how to read a chart. You need to be able to look at any chart of any market and, with the help of our humble indicator set, instinctively know what the next high probability move is. You need to be able to look at that chart and spot where the next potential resistance is, the next potential support, and that reveals the windows of opportunity that live between those 2 points. So again, we're now over 19,500, closing in on 19,600. We're about to hit that big round number sooner than you think at 20,000. Please make sure you use the logic alerts to learn how to read the chart. Okay? All right. Now, I know 353 weeks is a very long time. But way before we had Logic 247, we had our original alert service, the concierge trade alerts. They're different. Number one, they don't come out around the clock. They're posted typically 5 minutes before the Globex open each evening. We know today is the Tuesday session, but the Tuesday session began last night at 6 p.m. Eastern. So 5 minutes before the Globex session opened last night, all of our members and trial members had all of these targets. The S&P, Dow, Russell, crude oil, NQ, gold, and silver. So as we go through the charts today, just remember, you'll see the targets on the chart. Everybody had those targets 5 minutes before the market opened. So let's get that out of the way. And let's go to the daily chart of the ES, the bellwether. Okay. Now, we spent 2 days here straddling the 62% reverse fib. As I posted in the discussion group yesterday, last night, the step line crosses to the right side of blue and climbing. As you can see on the way up, the black step line is on the left side of blue and climbing. But where is it now? It's on the right side. So what does that mean? It means that price will most likely retrace to the BBC. Just like here. You see where the step line crossed red and falling? And where did it go? Right to the BBC. The green line's called the BBC. It stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Price always reverts to the mean, and in our case, the mean is green, and it's called the BBC, bull bear cross. Okay. So we had a leg and a retracement, pull back held, leg and a retracement, pull back held, leg and a retracement, pull back held, and then this leg did not take out this low, which means, is the trend coming to an end? Well, as I said, I want to see price get back up into this area. We know we've got potentially major resistance right here at this previous bearish cross. But first we got to overcome the 62. We got to overcome this high. We got to overcome this high. Those are all potential resistance. But before any of that happens, I think what we're going to see most likely is a retracement back to the daily BBC and the 50% reverse fib. Now the fact that if it doesn't get done today, then with the Fed announcement coming out tomorrow, things may not play as they normally do. But we're always going to trade what's in front of us. But we're not going to trade the Fed announcement. We're not going to trade the press conference, because that's just financial suicide. Now, the low of the day is at 56.07. We're talking about 55.28. That's a pretty substantial move that the market needs to make. But based upon the fact that the step line is now crossed, now we're well off the low of the day, but we're also well off the high of the day. So how we close today will be very important. And keep in mind that institutional traders will be positioning themselves for whatever they think is going to happen tomorrow during the Fed announcement and the press conference. Also, institutional traders, the ones with deep pockets who move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Has everything to do with account size. They can stay in a profitable position far longer than you or I might be comfortable, and they can withstand a deeper drawdown than you or I would be able to afford in many cases. I said all that to say this: whether you trade futures, stocks, crypto, Forex, ETFs, I encourage you to spend just 2 minutes with the daily chart of whatever you're about to trade. Take a free look over the shoulder of the deep pockets, and then identify what the market is most likely to do based on market structure. Resistance right now, of course, is the high of the day, and then the high of Monday, and then right here, the high of Friday. That's potential resistance. Once we take out Friday's high, now we run into this. See, you can't see any of that on your smaller time frame. So again, by spending 2 minutes with the daily chart, you see what the deep pockets are doing. You can see if there's indecision in what they're doing. And you can identify the major areas of support and resistance. And the market price is drawn to these important prices, important areas. Important prices, important areas are almost always tested. Give it a try. I think you'll like it. Okay, here's the ES. I posted quite a few charts yesterday in the discussion group, and you see this bearish cross. Now this is today, Tuesday, Monday. Back here's Friday. These are the new weekly trading zones that came out yesterday morning at 6:15 a.m. Eastern. We've published the zones for over 15 years, every week for our members and trial members. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. So yesterday, I had mentioned in the live trading room that, and here on the broadcast, that we had potential resistance in this area here. I posted a chart in the discussion group, and as you can see, when you have a bearish cross, that's when the red line gets below the green line. That leads to an extended move. The first time price revisits that area will almost always be good resistance. And it was. Now on the second and third attempt, this is what happens. Sometimes we break through, sometimes we don't. In this case we did. We got a leg and a retracement and a leg. And then going into the close yesterday afternoon, we sold off. And we closed yesterday at this green candle right here. That's the 4:30 p.m. Eastern candle. And the close was 56.71 and a quarter. Okay. Now, when the step line crossed blue and climbing yesterday, I posted a chart in the discussion group with this arrow that said we're most likely going to retrace back to the BBC. Then the question will become is, does the pullback hold? Now, the pullback holds more often than not. Whether you're pulling from above, from below, or pulling down from above, the pullback holds more often than not. And I explained yesterday, when we hit that BBC with this much red and falling, initially there was no red and falling in the picture, and then suddenly there was, and so we know eventually price is going to trade through the BBC. Price always reverts to the mean. Okay? Whether you're pulling down from above or up from below. So we opened right here. This was the opening candle last night. Now 5 minutes before the open, everyone had these targets. We opened below the BBC with red and falling, so we naturally expect lower prices. Okay, that's what you're looking for when you are looking for lower prices. Price needs to be below the BBC, and you need to have red and falling in the picture. And it took us right down to where? The short target, which was based off these lows right here. That is market structure. Now, don't just look at this triple bottom here, but let your eyes wander all the way over to Friday. Bullish cross. First time price revisited that area. Good support. See how that works? Okay. So, we got to the short target. We consolidated for hours. And then we finally dropped to the weekly zone below. When price encounters a weekly trading zone, one of three things happens. Consolidation is about 70% of the time. 20% of the time is rejection. 10% of the time, the slice. So down we go. We attempt to pull back to the BBC right here, but there's not enough buying pressure, so we drop a little bit lower. Now, this low right here, that low, 5607, $56.0530. But now look at the horizontal line on my cursor. See how that low from Friday became today's low? People always ask, well, how far left do I have to look? As far as you need to. And this was exactly how far you needed to look. Support will always send the market looking for resistance. Now remember, when we trade through a short or long target, and we get a leg and a retracement, that target will often become resistance. And it did. Now we spiked it just a wee bit right here, and then price came right back. We're currently sitting on top of the BBC. That's bullish. We have blue and climbing right below. So the way price got rejected up here, see, we got rejected before we got to the bearish cross. Okay, so here's the bearish cross where we would expect resistance. Price didn't get quite that far. It got right. See these highs across here on the open last night? But that was short-lived, and we came right back. Now the step line is, now price is just barely overcoming the step line. Okay, now that's potential resistance. You got potential resistance here. If we get back above the short target, then you've got a pretty nice window of opportunity right here. Yeah, we'd be a little more conservative than that. How about that? Okay. So what are we talking? Oh, 55, 62 to 68. So that's 6 points right there in that window. It only takes 2 points to get your goal for the day. But you got to be patient and wait till you get there. Okay. Now, again, this is a conservative window. Price could travel all the way up to this high. It could travel beyond the high up to the bearish cross. Okay. This is why you need to learn to function in multiple time frames. Okay. You got your 30-minute on one screen, and you've got your range chart, your trigger chart, and on another screen. Digital real estate used to be very expensive, but you can go to Walmart and get a 55-inch or 65-inch monitor for about 300, 350 bucks. Come home, hang it on your wall like a picture, run the cable. You're looking at a 55-inch monitor right now. This is my second one. I wore the first one out. I could never imagine going back to trading or just doing normal day-to-day business on a little tiny screen. I have some large screens on my credenza and on my actual desktop, but I spend the majority of my time looking at the big screen, this one up here. Okay, so the question now, price is trapped between the step line resistance and support times 2 right here at the BBC in blue and climbing. Who's going to win? I don't know. And you don't have to know. That's the beauty. What if this pullback doesn't hold? What if price trades down? Okay. Now we can sit back and relax, and price will do one of two things. It'll come up here and attempt to fill this window, or we'll get below the zone and it'll attempt to fill this window. And again, both of those are very conservative windows. But by the time we talk this time tomorrow, I'm sure you'll see that one of these two windows has filled or has at least attempted to fill. All right, on the Dow. Here's where we opened last night, below the BBC, with red and falling overhead. So what do we expect? Lower prices. And that short target, bullish cross right there. Support will send the market to resistance. Remember, the pullback holds more often than not. Resistance will send the market looking for support, which it found at the weekly trading zone. Support sends us back to resistance at the BBC, and we even spiked up to touch the zone. Price is always trying to get to a weekly trading zone. If price is above the BBC, it's trying to get to the zone above. If price is below the BBC, it's trying to get to the zone below. Now, which zone is it trying to get to? Well, it's pretty obvious, right? Now, this is a pretty small window to work with, so we got there? 49.10 down to 48.70. That's 40 points. You only need 20 points to get your goal for the day. But again, when price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support. So in order for this window to get filled, we've got to do two things. We've got to break the support at the zone, and we got to take out the low of this candle. Okay. Now, price may not stop at the low of this candle. It may travel all the way down to the zone below. We don't know. What we do know is that if price breaks through there and takes out that low, then there's a very high probability that price will travel at least down to this low. Okay. Russell, we opened below the BBC with red and falling overhead, so we expect lower prices. And it takes us right down to the short target and down to the zone. Then we overshot the zone a little bit. And if you go look left, you'll find out where this support came from. Support sent us back to resistance. We traded through the short target. Now look what happened when we pulled back to the short target. Resistance. So we got a leg or a retracement, and now what are we getting? Another leg to the downside. $19.88 down to $19.85. That's 3 points. You only need 2 points to get your goal for the day. In Q, we opened below the BBC with red and falling overhead, and it took us right down to the short target. And that target was based off that bullish cross from Friday. Remember, this is today, this is Monday, back over here is Friday. Market structure in action. So it held and it consolidated, finally broke through, traded down, and then when price popped back up, where to find resistance? Well, you can see it. Now, we're at a really important spot. We're above the BBC. We're inside the zone, basically, 94/95. We got blue and climbing, okay? So that's a setting for the market to make a move to the upside. But I'm concerned with how price got rejected quite severely at this area right here, these overnight highs, okay? So again, if price can get back above that short target, what do we got? Let's call it 980 to 2013. So that's basically 30 points, $20 a point, $600 per contract traded. Crude oil. Huh. Boy, crude definitely had a turnaround Tuesday, huh? Here, let's shrink this down a little bit. There we go. Okay. So, this is where we opened last night. We're above the BBC. We run right up to the long target. Okay. Now remember, these targets were out 5 minutes ahead of this candle opening. Okay. But we never got below the... We spiked below the BBC, but we never pulled away from it. So I'm not thinking about the short target. But once this candle prints, I'm definitely thinking about this. We opened at 57.33 and ran to 45. That's $120 per contract traded. And then we got a leg and a retracement and a leg, and see how we found resistance right at the zone, retracement, and then a leg that got us through the zone, then a retracement, and then another leg that took us all the way up to the zone at 59.45/59.50. Now the high of the session is the high of when? Tuesday, Monday, Friday. See Friday's high right there? Or you see where red or blue turned to red? That's that spot right there. When the market finds resistance, it's going to go look for support. Notice the step line has crossed to the right side of blue and climbing. So what do we expect price to do? To retrace to the BBC. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. The pullback holds more often than it doesn't. As you can see, it held here. When it pulled down, when it pulled up, it held, 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 held. Then we had the huge gap lower open Sunday night. And then Monday we went from zone to zone, back to the zone. And today has been a huge day for gold. We still got crude. Still got several zones left overhead on crude. Now we'll go to gold. Now gold is above the highest weekly zone on a Tuesday. Gold's the one that's really on a tear. Look at the last 2 days. From 32.47 yesterday to 34.19. Every dollar in price that gold moves is worth $100 per contract traded. So we opened with a down candle, but we're above the BBC, so we're expecting higher prices. Price comes to the BBC, closes green, and runs right up to the zone. Closes right at the zone. But then we get a leg and a retracement. Leg and a retracement, a leg and a retracement, a leg and a retracement, and we're still in price discovery mode. Now by close of business on Friday, based on the last 15 years plus of history, we expect price to be at or below the highest weekly zone. Has that happened every week, every market for the last 15 plus years? No. Has it happened more often than not? Why, yes it has. Yes it has. And what do we got left? Silver. Here's the open last night. We're above the BBC, so we're expecting higher prices. We consolidate at the zone, and then we take off and make a run to the target. Okay. Now it only takes 2 pennies to get your goal in silver. We hit the zone, and we just been consolidating sideways for most of the session. The highest weekly zone this week for silver is up at 34.51. From zone to zone to zone. That's how it's worked for 15 plus years. Now, just visualize it. Step line is crossed, blue and climbing. Once we take out this low, now notice that the low of today is also the low of Friday and basically the low of Thursday and the high of Wednesday. Look at the horizontal line on my cursor and see how many points, how many candles am I touching? 1, 2, 3, 4. Okay, that's an important price, that's an important area. But once we break below that area, we take out the low of today, then it could be a very quick trip down to the BBC. Now, if we were expecting a rate cut tomorrow, I would say, yeah, maybe not. But we're not getting a rate cut tomorrow. Unless Jerome decides to surprise us and President Trump. So we'll see what happens. To become a member, go to mytradingiq.com, watch the videos, read the content, and then when you decide, send an email to support@cfrn.net and just say, I want to become a member. We'll send you an email that explains what it means to become a passport holder, and there'll even be a link that you can click to seal the deal and become a passport holder. Michael's here, so we'll go ahead and let him do his thing, and then when I come back, I'll finish explaining everything it means to become a passport holder and wrap it all up with our good word for the day. Michael, if you're ready.
All right, I am ready. Here we go.
Okay.
All right, you see it?
Yep, there we go. It's good.
All right. Good afternoon, everyone. Today is Tuesday, the 6th day of May, 2025. If you have not taken a free trial with us and you'd like to take a free trial with us, then all you need to do is go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial, none. All right, click on that purple button. It's going to bring you to this registration page, this one right here. On this page, all the way out, there is your name, email, and phone number. Down at the bottom, you need to give us your TradingView login ID. Okay, if we don't get your TradingView login ID, we don't know that you took the trial. So please give us your TradingView login ID. I'm sorry, if you don't give us your TradingView login ID, you won't be able to get the indicators activated. That's what I meant to say. We do know that you took the trial if you hit register, but if you don't give us a TradingView login ID, you won't be able to get the indicators indicating. Sorry about that. All right, so do that. Okay, and for those of you guys who are switching over to Sierra, I just added something else. If you go here to the home page at mytradingiq.com, let me just refresh this just to make sure. Okay. If you go here to mytradingiq.com and go to trading platforms, if you're switching over to Sierra, this is the email that you need to send to this address, gfsupport@stonex.com. You can download the PDF. You can send them that. This is the email that you need to send to them, right? They have 2 steps that they have to do. It says it right in here. Right here, please provide the CQG WPL login and enable the Sierra charts. Okay, those are 2 steps that everybody that is switching over to Sierra needs to do. All right, that was what I said at the end of the first session. I said I was going to do that, and it is done now. All right, so the spreadsheet. We had a pretty good day today. We got the goal early on, which was good. That's always good. The markets, we have FOMC coming out tomorrow, and it's a big day for the FOMC. So, it's a big day for the FOMC. So we have to, well, the markets are being a little jittery, it seems like right now. And, they were pretty good early on, but then they got there was a lot of sideways action. I expect at the end of the day today, toward the end of the day today, we'll see some more volatility. But I'm sure Dwayne's getting into all that stuff for you. So today on the NQ, we're up 140 ticks. On the Russell, we're up 10. On the gold, we're up 36. On the S, we're up 6. That put us at $1,185 per contract on the morning session. Today, it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $1,000 with 10 contracts. We took a total of 23 trades this morning. So on the month now, we're up $3,297 over 3 business days, averaging $1,099 per contract per 2-hour business day. On the year now, we're at $123,115 over 75 business days, averaging $1,641 per contract per 2-hour business day. For the 24/20 blueprint, the idea is to get you to trading 20 contracts over 24 months. Now, you might want to reduce that to 10-12 blueprint, but because 10 contracts is much more efficient than 20 with most markets. But anyway, the idea is if you're consistently profitable and you achieve a goal of $100 per contract per day consistently, you should be able to add one contract per month by adding one contract for every $2,000 in profit that you gain. If you did that so far this year, you would have only had to work 9.95 hours, and you would have averaged $3,439 per hour, right? You would be up $34,222, $34,222 so far this year, okay? All right, that is not the right one. This is the right one. Well, let me go here and just go back to the other one though. It'll be better. Here. All right, the trades that we took today, we had more trades than yesterday. Not a huge number of trades, but more trades than yesterday. If I look at this, the majority of the trades, they're pretty, well, the Russell was the only one we only had one trade on. So let's just cover that Russell trade first. All right, on the Russell, we were using the Russell as an example. By the way, the recording that I made this morning, I put out in the TIQ video channel. I put it out in the TIQ video channel. So you can go and watch that today, the one that I made this morning. This, I was showing how this right here usually indicates a direction change, right? Or at least it's going to come back here and find support here in the middle instead of looking for it to go all the way down here, because we were below the YBR when all this started. Instead of looking for it to go all the way down here, we're looking for it to change trend. And it did actually change trend in the middle of it all. And it gave us one long trade right here. That was the one trade that we took, and we got 10 ticks profit on that. That was all that we did with the Russell today. Okay. Now, I guess I'll start out with gold. Okay, today in the gold. In the gold today. In the gold today. We had the very first trade, we picked up 5 ticks. Then the second trade, we picked up 3 more. The third trade, we picked up 10 more. That put us at 18. Then we picked up 9 after that to get us to 27. And then 10 to get us to 37. And then we stopped out, and that put us down to 22. And then we picked up, looks like 13 there to get us up to 35. And then we had one more right here to get us to 36. We got into some pretty good chop in here. It doesn't look like during the break, it did move up. Gold was the one that was moving more than anything else today, it seemed like, when it came to trending and nice trending moves. Gold was the one that seemed to have more of a trend than anything else today. Okay. The Russell was our next one. We already did the Russell, so we'll go to the ES right now. And on the ES, on the ES, our first trade on the ES is right here. We picked up 8 ticks on the first trade. We had a break even there and a break even here. Now this was an aggressive trade that I got the break even on. What I did is I bought at the open. When it retraced down here to the 50% mark, I bought at the open of this bar right here, and I ended up getting a break even on it. Another break even there, another break even there. All those break evens turned out to be really good trades. Then this one here, I finally stopped out on that, and that was a mistake. I don't know why I marked it as a mistake. I think I should have my stop at break even, but I stopped out on that. That put us to -2. Okay. And we had right there another aggressive break even, and here was an aggressive long trade that I took. We picked up 4 ticks on that. That got us to +2, and then just a regular short trade here. That got us another 4 ticks to get us to +6. We went sideways here. This is all during the break. Went sideways here for a while. There was a lot of movement right here on the ES. I'm surprised that happened. A lot of movement right there on the ES at that time of the day, and then it got eerily quiet again. Let's look at what it looks like. Well, let me do the last one here. The NQ is the only one we had left, right? So compared to yesterday, I had quite a few trades on the NQ. Yesterday we only had 1. Let's look at what we had today. Okay, on the NQ, the very first trade here on the NQ, we picked up 4 ticks on the first trade, and then 44 ticks on the next trade to get us to 48. And we had a break even. Then from 48, we picked up another 40 ticks here to get us to 88. Then we had a break even. Then another 40 ticks there to get us to 128. Then I didn't write it in, but we had one more trade in there. one more trade in there where I picked up 12 ticks to get us to 140. Okay. And that was it. The same run up that we had in the ES we had right here, and you see it just came right back. Whatever it was that did that, it came right back to where it started. So this consolidation stuff in there, I don't know what made the markets move like that, but something did. But right back into the consolidation period right there. Consolidation area. All right, so that was all the markets today. We ended up with plus 140 on the NQ, plus 10 on the Russell, plus 36 on gold, and plus 6 on the ES, put us at $1,185 per contract. Today it took 3 minutes and 1 trade to get to the goal for the day. At that point, we're up $1,000 with 10 contracts, and we took a total of 23 trades. So on the month, we're up $3,297. That's over 3 business days, averaging $1,099 per contract per 2-hour business day. Okay. All right. Let's get in there and place some more trades. Okay. Let's get in there and place some more trades. All right. All right. On the gold right now, we'd be looking for a pullback. We're above the YBR. We have a nice long leg length right here. We'd be looking for a pullback. The leg length is similar to the last leg length, right? Right here, similar to the last leg length. The pullback on the last leg length was kind of deep, but the entry point was right in the middle. Another entry point would be great right in the middle, just like that. If you're looking for an entry right about there, okay? So one of the things that I've been trying to get across to people this week, I've been talking a little more about, is when you get into a trade, Chris. Okay, that wasn't for me, right? All that stuff that you said? I don't think. No, okay. I'm just seeing it right now. I just opened up the question box. That's all right. It's all good. I would be looking for an opportunity for the price to pull back down into here and go to an entry right around in this area, okay? It's going to take 2 bars to get from the overbought to the oversold, a minimum of 2 bars to get from the overbought to the oversold. So we get a down close on that one and a down close on the next one, and then a possible down close on the one after that, and be looking for an entry on the up close after that, okay? That's what we'd be looking for. Okay, so we're looking for this to pull back down into this area right here. Okay. And we'll be looking for a long trade if it does get down there. It's going to take, now it's stretched out a little bit. Now it's stretched out a little bit. So it's moved up a little bit because it went up a little bit higher right here. All right, so it's moved up a little bit. And that's and that is that. All right, so we're looking for a pullback down here into this area right here. All right. The same thing's happening over here on the ES. Now the ES is in a good spot for an aggressive long trade, okay? When I say aggressive long trade, I mean by the open of the next bar right here. Okay, so when this gives you a down close, by the open of the next bar. That's what I'm looking for. This is the ES right here, okay? Put it always on top. There it is right there. I'm buying the open right there. Okay, now, the reason I'm doing that, well, let me manage my trade first. Here, move the stop to break even. Now, the reason I'm doing this, there's 8 ticks right there. The reason I was doing that, let me just point it out to you, okay? This is something that I want you guys to really understand, this right here was a perfect spot for an entry. Okay, it was right at the 50% retracement. We were in the oversold. We were going into the oversold on that bar. It was time for it to run back up, and that was a perfect spot for an entry. Did you guys see that? That right there is exactly what you want to see. And a lot of times it'll be the conservative entry that'll get you that trade, but when you have the opportunity to do it with the aggressive one, it's just as good. Okay, did you see that? Okay, now it did not put in a higher swing, so you had plenty of opportunity to take profit on that. Right? If you waited for the conservative trade, your entry would have been right here. You would have had less opportunity for profit, but doing the aggressive right there at the midpoint was perfect. Right? Hopefully you guys all saw that and understood that. All right. So on the gold right now, we want this to pull back down and hit the midpoint. Preferably hit the midpoint, right? The way it's coming together, it could come together perfectly, just like that one there with the ES did, all right? Right now, you're gonna get a down close on this bar. That'll put it right about here. So the next bar could give you a down close here. The down close on this bar might put that, it did put that into the oversold. Okay, so that's not exactly right. That's not exactly what you want. In this particular case, I would wait for another down close right here to give us a flat spot. And then you could be aggressive and take it off the flat spot at the 50% retracement, or you could wait for the conservative trade. The conservative trade, though, I would want to have two down closes because you want the conservative trade to be here. All right, this is where it's giving you the conservative trade right now. I would wait for a pullback on that to enter on that trade. All right, so if it goes 5 ticks into profit before you get a conservative entry, then just let it go. Okay, and that's pretty close right in there because you want your stop to be below here. Okay, so right about in there is where you'd want it. There it is. Okay, I just entered right there. Okay, and that's about where you'd want the thing to be. Because now my stop is down here at 18.5. Right? It's down here below the midpoint. That's where you want it to be. And so now I'm going to bump my stop to break even. I'm going to lock in a couple of ticks, and I'm going to lock in 5. That's $500 right there. $500. Okay, so between those two trades that I just took with 10 contracts on, it's $1,500 we just made. Do you understand why I'm doing that? Does it make sense to you guys? Good. All right, so we don't really have any other opportunity right now like that. All right. So now we wait. Time is at 1:14. All right, so I'm just waiting. I'm just waiting right now. But yeah, it was. Sorry about that. I was talking the whole time. I was saying, what you guys can do, when the markets are really slow and sideways like this, is you can be aggressive. Now, this is really aggressive if I take off the context and I'm really aggressive with it. If it goes into the oversold right here, you'd buy the open to the next bar. If it goes into the overbought like this, you'd sell the open to the next bar. It goes into the oversold, you buy the open. It goes into the overbought, you sell the open. That is really aggressive, and you got to really be quick with your risk management if you're going to do that. The other aggressive way is to do it with the trend. Like you'd only be going long here, but you'd still be aggressive. Okay, you're not looking for the conservative trade where it's coming out of the overbought or oversold. And I want to say that the markets have to be consistently choppy. It works really well. That stuff works really well if the markets are consistently choppy. And I was showing over here the last time I really did that was here right around Christmas last year. The markets were choppy for a really long time. And even after Christmas, as we were leading up until the inauguration and all that stuff, the markets were pretty choppy. And then I started doing the more conservative trades once the market started trending again. And so the conservative trades are good for the trend. Even the aggressive conservative trade, the aggressive trade with the trend is really good if the markets are trending. Okay. If it gets really choppy like this, I just wanted to point out that you can be aggressive. You can be really aggressive. Use the divergence here between these two lines. You can be really aggressive with that. Okay. If you have long leg lengths, like leg lengths that are 4 or more bars, then you probably want to be conservative because the flat spots happen when you have longer leg lengths. If you have longer leg length up, the pullback is going to be longer too. All right. So if you have a longer leg length up and you have a pullback, that's when you start looking for the opportunities at the 50% retracement or at some other significant level that has found support and or resistance in the past. Okay. Okay, so let's look at what's happened over here with the gold right now. We only have a few minutes left in here, but let's just look at what's happened with the gold. All right, you have to go from where it came out to where it went back in. So this is what we're looking at for our levels right here, right? Going from here to here. this would be the ideal spot. If you get a down close on this bar right here, a down close on this bar, then being aggressive on the open of the next bar would be a decent trade, okay? That's what I'd be looking for right here, okay? A down close on this bar, being aggressive on the open of the next bar, because the next bar should pop out of the oversold right here and start pushing it back up. If it pops up right here, it's going to be, this is a conservative trade. All right. Now you can jump in right now if you want. It'll probably work out just fine if you jump in right now. But you could also wait for a pullback in here. All right. Now the thing is, if it's gone 5 ticks into profit, and it has now, if it's gone 5 ticks into profit, then you've missed the opportunity. Okay. So that was okay. I was just being being conservative by waiting for it to come down all the way down here. Now it's gone all the way up and come back down. So now we have a smaller leg length that we're dealing with. Okay, now we're dealing with this right here. So now the aggressive trade would be a down close on this bar right here. All right, but it showed weakness right here. It showed weakness by not putting in a higher swing right here. When it put in overbought, it didn't put in a higher swing. All right, so it's just got some chop in here. I'm just going to leave that alone. I'm going to leave that alone. Okay. This right here is really close to the swing low. You probably have enough room to get your stop to break even if you took it from right there, getting down to the swing low. All right. Take a little profit on that if you took that trade coming out of the overbought. Actually, that didn't even go all the way down to the oversold, so that wasn't even a valid trade. Sorry, my bad. Let me get rid of the slingshot down here for right now. Okay. All right, so now what we have right here, guys, this is something I went over earlier today. We don't really have a lot of time to get into it, but what we have right here is we have higher highs and lower lows on a single bar, right? So when you have that, it is typically a trend change scenario. So now instead of looking for this to get down to the prior swing low as your support level, you'd be looking for it to get down to the midpoint as your support level. Okay. So from right here, well, it's not going to work out because it didn't come out of the overbought. But if it did work out, then just for a second, let's just get rid of the context, all right? So you forget about the trend for a second. Now, right here would be an aggressive, if it went into the oversold, right there would be a good spot for an aggressive long trade. Right, the way it's going to work out would be a good spot for conservative long trade. If it were to come out of the oversold right here, it'd be a good spot for conservative long trade. All right, but I know because we're sticking with the trend, we're not going to look for long trades right here. But this is a great spot for it to bounce from right here. All right, that's all I'm trying to say. Because we had this, right, that makes this scenario support. Instead of this being the area of support or the target area, this becomes the target area and the area of support. Do you see that? That happens again and again and again and again. It's important that you guys understand that. Because it happens, you know, when it's time to start thinking about going in the opposite direction. It's good stuff. All right, well, that's going to be it, guys. I'm going to wrap it up here. Let me go here to mytradingiq.com. If you have not taken a free trial with us, then click on the purple button right here. There's no credit card required for the trial, right? Just click on the purple button. And when you click on that, you will be brought to this registration page. On this page, just fill out the form down below, okay? All we ask for is your name, your email, your phone number. Down here at the bottom, make sure you give us your TradingView login ID. Right? Click on this link right here. If you don't have TradingView, click on this link right here, and it's going to bring you to this page. Watch this video. It's only about 3 minutes long, and you end up clicking on this. If you do that, then all you need to get is the essential with the real-time data, okay? Just follow the video. And that's it, all right? With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep.
Excellent.
Okay, recap of the morning session.
Today, it took 3 minutes and 1 trade to get to $1,000 with 10 contracts.
Good job.
Thank you. Thank you.
All right, guys, where we left off. How do you become a member? Go to mytradingiq.com, watch the videos, read the content, and when you're ready, send an email to support@cfrn.net. Tell us you want to become a member. We'll send you an email that explains everything it means to become a passport holder. And there'll be a link you can click to seal the deal. Number one, you're going to get 2 hours of live training every trading day. That's an interactive environment in a live markets, real trades, real money, while you trade along in your demo account, asking every question that pops into your head. And again, trading in your demo account so that you can qualify to go live and start trading real money. You got to learn the strategy first. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. So we've plugged that hole. On top of the 2 hours of group training every trading day, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That's why it's so important that you learn how to read the chart, so you know where to expect resistance and you know where to expect support. In doing so, you unveil the windows of opportunity that live between those two very important points. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published every evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. As a passport holder, you get to attend the members only workshop every Thursday night, 8 p.m. Eastern. And you get the golden key that unlocks all the private channels in Telegram. And one of those channels is the members only workshop channel. Every Thursday night after the workshop, we put that recording in the workshop channel. So there's probably, 100, 200 of them in that channel. Do you need to go watch them all? No. But when Valerie posts the video, she usually puts some commentary in there about what we discussed. So you can scroll through and maybe there's something you've been wondering about or didn't quite understand, and all of a sudden you see, wait, here's a workshop where they talked about that very thing. So again, you'll have access to them all, but you don't need to watch them all. Okay? Just show up every day, follow the instructions, ask lots of questions, you'll be fine. Okay? Everything a trader needs, all under one roof at one low price. Let's wrap it up with our good word for today. Use your imagination. Ephesians 3:20. Now to him who is able to do immeasurably more than all we ask or imagine. And that's a lot, because I got a pretty vivid imagination. Lack of faith is not a failure of logic, it's a failure of imagination. A lack of faith is the inability or unwillingness to entertain thoughts of a God who is able to do immeasurably more than we all ask or imagine, according to his power that is at work within us. Did you get that? God wants to empower your imagination. A pastor writes, if we're going to have an eternal impact on our culture, we can't just criticize it or copy it. We've got to create it. If we're going to reach our generation with the gospel, we can't just appeal to logic. We've got to capture their imagination. And C.S. Lewis is a great example of both. Can you think of anyone more left-brain logical than C.S. Lewis? His theological writings, from Mere Christianity to The Problem of Pain, are as logical as logic can be. But Lewis combined left-brain logic with right-brain creativity. The Chronicles of Narnia continue to capture the imagination of new generations. The church ought to be the most creative place on the planet. And there are certainly pockets of ingenuity and imagination, but we're nowhere near our creative potential. Perhaps this is because we have a false definition of faithfulness. Faithfulness is not doing it how it has always been done. It's not preserving the status quo. No, we must never water down the gospel or promote biblical compromise for cultural relevancy. The bottom line, our message must never change, but our methods must change if we are to gather in the final harvest before the Lord of the harvest returns. And that's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.